Hey, Jim, thanks for joining us. What did you think, first of all, about, I'm sure you didn't expect any reference to QE3 either, but what did you think about what we did hear from the Fed chairman?
I don't think we heard anything from the Fed chairman. He said a lot of stuff that, in essence, is kind of punted it down to the next meeting. As a matter of fact, they expanded the September meeting, which is in 3 weeks, to 2 days, as he said, so they could more fully discuss the issues. So we could take all the hype and all the anticipation in Jackson Hole, and we could move it 21 days down the road and start it all over again for the September FOMC meeting. Aren't we all excited that we get to do it again?
You know, Jim, I heard some people today saying that maybe the markets are showing right now optimism in the president's speech, which is still a couple of weeks away. What do you think about that idea?
The markets were inconsistent today. You know, basically, was it a risk-on day or was it a risk-off day? Stocks were up. That would suggest it was a risk-on day. But gold was up big. The Treasury bonds rallied. That would suggest it was a risk-off day. So there was no consistent theme to the reaction in the market today. It was one of those peculiar days. We had the Dow up over 100 and gold up over $40. I don't know if we've seen a day like that this year.
One of the big headwinds, I think you would agree, to this market on any given day is what goes on in Europe, right? I mean, traders last week were saying that's 90% of what's going on down here. We're going to hear from Jean-Claude Trichet tomorrow in the ECB. Do you expect any positives from him?
Well, I do think that the Trichet speech tomorrow might be the more important speech out of Jackson Hole over Bernanke's. And you're right that the headwinds are definitely coming out of Europe. At this point, I don't know what Trichet could say unless he's going to try and hint at some kind of version of quantitative easing coming out of the ECB to help stabilize the market. But right now, with the Finns demanding collateral and we're seeing 45% on two-year Greek yields, it looks like the whole Greek bailout that was agreed to in late July is in peril. And if they can't get the Greek bailout right, which was supposed to be the easy part of it, it leaves us very pessimistic as to what else they can do, because everything after the Greek bailout gets much harder.
Jim, it's Margaret, Brennan here. You put the odds of a recession at 51%. Where are those odds now after Bernanke speaks?
Oh, I still think they are. I don't think that Bernanke's speech really changed the outlook on the economy. And the reason that I put it at 51 is that if you had to ask me, are we going to have recession or not, I'd say yes, we are. And I recognize that the consensus is around 35. But if you look at the economic data as it's been coming in for August, consumer confidence, the Philly Fed, it's not good. The Economic Cycle Research Institute's leading economic indicators had another big dive again today. All the data is pointing at an economy that is not good over the last 30 days. All the data that says we're okay is all pre-August 1st, pre-market sell-off data. So I am kind of pessimistic that the economy is not doing well. And remember, we found out it was already growing at 1%
Right.
before we took this tumble. So we didn't have a big headwind going into this.
Right. Let's look at some of the text from that Bernanke speech. He said, quote, "The committee will continue to assess the economic outlook in light of incoming information and is prepared to employ its tools as appropriate to make for a stronger recovery." So, you know, Jim, I was live on air at 10. I got instant analysis and people said, wow, maybe this is a cry for help in pointing the finger towards fiscal policy, not monetary. But with a little hindsight in rereading that statement, perhaps Bernanke is saying, just wait a bit longer. I can support you.
Yeah, I mean, you can read it either way. I mean, that is a kind of an ambiguous statement. We didn't get a chance to see him say it live, so we only have to read it. We don't know what kind of invitations he used. But you're right. It could mean, as I think it means, is check back with me at the September meeting, and we'll see how the economy's going then. So I think that this idea of QE3, although I don't think it's a good idea, you know, there's what the Fed should do and what the Fed will do, and under what the Fed will do is we'll have to check back in September. They still may do this if the economy doesn't show any signs of improving over the next couple of weeks.
All right, Jim Bianco, always good talking to you.
Thank you.
Adam Johnson, I hear you're standing by.
I'm standing by, and I tell you what, I want to show you the dipty-doodle of the day, all right, because it speaks to what Jim was just saying, also what we heard from Ben Wilfs of Sunrise Securities, the freshman traders, we'll call them, all right. This is the dollar index over the course of the day. Look what happened when we first got the announcement. The dollar rallied on the assumption that, hey, there's not going to be any QE3, not at least right now. And then all of a sudden people paused for, all of about 2 minutes, and they realized, wait a minute, just because he didn't announce QE3 today doesn't mean he might not announce it in September. And look what happened to the dollar index. Right back to where it was and ultimately finished even lower. down about 2/3% on the day. The other one I want to show you, Margaret, and again, Jim Bianco just mentioned this. Look at gold futures. All right, look at gold futures on the day, up $60. All right, that is a very steady move right through the morning when we came right at about 10 o'clock. That was the dip, and then look, right up from there. So the point is, Jim Bianco, if you're still with us, the question is, at what point does the market say, you know what, we don't care if you're going to announce QE3 today, tomorrow, or the next week, because we're going to basically assume you're going to announce it at some point. How far do you take gold up? How far do you take the dollar down?
Well, I think if you get that the market decides that QE3 is coming, and I still think that it thinks that that's an open question, gold could make a new high. The market, whether equity markets will have to make an assessment as to whether or not QE3 will be positive like QE2 was for it, or if it's going to be too little. And then the equity market will react off of that. But you're right. I think that the takeaway with gold and the takeaway with bonds today was that it's still very much on the table. The takeaway with stocks was that maybe it's not, and that's why I said it's a very confusing day to try and react to Bernanke's speech, because they've got so many mixed signals right now.
Does he, Jim? Do you think he wants to do that? I mean, Paul Krugman had a very interesting column today pulling out one of Ben Bernanke's old papers from 2000, advice on how to spur the Japanese economy by taking down the value of the dollar as drastically as possible, by pointing to maybe inflation targets of 3 or 4% a few years out. I mean, doesn't Ben Bernanke want to do that, but he's politically constrained?
Yeah, I think that's exactly it. He would like to do it. I think the biggest problem Bernanke has is something that everybody's kind of missing. There were 3 dissenters to the idea of holding interest rates steady for 2 years. 3 more different Fed presidents came out and said that had they had a vote, they would have dissented too. And I wonder if the problem here is that Bernanke would like to be more aggressive, but he knows that he just doesn't have the votes, or if he has the votes, he doesn't want to look like he rammed it through the Federal Open Market Committee and have a split decision. And maybe that's what the 2-day meeting is about, so that they can form a consensus. That there is not a consensus right now, and he doesn't want to come out and say, we're going to do QE3 or something else, or raise inflation expectations, or do some version of Operation Twist where they buy longer-term securities, or some other tool in their toolbox, until he has everybody on board. And right now, after what we saw in the meeting from 3 weeks ago, he doesn't have everybody on board.
Well, Sheila Dharmarajan is here, and I know, Sheila, one of those theories thrown out there was that you could even see Ben Bernanke get active in corporate bonds or in financial bonds. You've been looking into the corporate market. What do you think?
Yeah, and Jim Bianco mentioned there's a lot of confusion in the market, and you can see that when you take a look at corporate bonds. In fact, sales of corporate bonds have actually been diving. We are heading for the slowest month since December of 2008. This week alone, there were just about $6 billion in sales of corporate bonds. That's a 72% decline from a similar period last year. Also, yields have been soaring. In fact, we are at the highest level since March. You can see that the yield in terms of spread to Treasury also rising as well. My question to you, Jim, is what is happening in corporate bonds? At one point, a lot of investors are flocking towards that because corporate balance sheets were in such good shape. Things seem to be good in terms of corporate profitability. Now it all of a sudden seems like the corporations are having a tough time borrowing money.
Yeah, I think that the answer is they're afraid of a recession. The corporate bond market for the last couple of years has led the stock market. And with the corporate bond market underperforming the stock rally we've had for the last week is an ominous sign that this stock rally won't last. Now, if corporates turn it around, then it will. But if it doesn't, expect stocks to come back to corporates as opposed to the other way around.
All right. Jim, thank you again. Jim Bianco, good talking to you.